There you go. All right, good morning, everyone. Let's get started here. All right, U.S. markets managed to kind of hang in there all day. We came back and tested flatline later in the session, only to really push more or less to the highs of the day. There, you can see we closed up relatively close to the highs. We did make another new all-time closing high in the S&P. It's a bull market, baby. There's nothing going to stop it at the moment. With the ADP employment numbers, which basically came in line. We had U.S. factory orders that were pretty solid, but nothing really to kind of drive the market either way. I think everyone's still kind of hanging in there. They're going to wait for the non-farm payroll number, and we're going to get to tomorrow. So, this is what we're going to be waiting for. Probably not a whole lot of volatility today. Probably a bit of a sideways move until we see what's going to come out of tomorrow's numbers. All right, Asian markets, same thing as usual, just a bit mixed with mostly everything going up except for China. China, up in the morning, but just can't hang on to it. Failed. The one thing that I think is going to continue to weigh on people is going to be the Chinese stimulus things. I mean, this morning we did have China that's coming out and the form of small business tax breaks and increased spending on railways and housing, but I don't think that that's enough. I don't think that unless they're gonna really implement something significant, I don't think it's going to get the market any sort of boost. So we're going to continue to focus on that. I think going forward until something significant happens there. The yen made an attempt on 104 this morning, couldn't really break through, but we continue to see a slightly softer yen and kind of buoying the Nikkei index at the moment. All right, we had the HSBC China PMI services number, which actually came in better than the prior number, which is the first reasonable data point we've had in a while. We've also got the same number coming out across the entire Eurozone and the UK. We've got retail sales coming out in Europe. We've got the ECB, which is going to announce interest rates today. We've got U.S. trade balance, ISM non-manufacturing, market PM services PMI, and initial jobless claims, which will be the big one in the States today. So, like I said, obviously we've got jobless claims, which is normally a big number. We've got all these other things to pay attention to. At the end of the day, everybody's going to be waiting for the non-farm payroll tomorrow, so we may see a bit of sideways action today. Bottom line is just going to follow the trade action and wait to see how it pans out. All right, let's jump into the maps. Okay, the first thing that we're going to have a look at, sorry, I'm just waiting for my stuff to pop up here. All right, the first thing that we're going to have a look at is Sanlam. Sanlam, you can see there. Let's just zoom it quite way forward. I'll actually try to pop into maybe a 5-day in a minute. We made a big reversal yesterday in Sanlam. You can't call this a key reversal because it didn't close below the lows of the previous day. It did get below there at one point, but we managed to kind of pop up just above that. But it's still a reversal nonetheless. It's a reversal off of the breakout here from 54, and I wouldn't be surprised if this is the start of a retest of that level. So here, just looking at here, this is a 5-day chart on Sanlam. You can see this is the start of the day's session right here. We really pushed up in the morning, only to kind of fail into the afternoon and close very close to the previous day's low. So a nice reversal there a day out of Sanlam. See if it's got any momentum today. Maybe take us back down closer to that 54 support level if it does. All right, Tiger Brands. Tiger Brands we're going to show for we're looking at a year chart here. And Tiger Brands really, which had been a dog for the last few months, we had a nice rally here off of the back of our inverse head and shoulder pattern that played out beautifully. As it broke the neckline here, we really traded up almost perfectly to the target, maybe just above 285, only to fail yesterday, fail quite badly. You can see there the last couple of days have been a bit back and forth there, but failed quite badly there. I think the B of A Merrill Investment Conference in Sun City, there was definitely some negative rhetoric that kind of came from an interview with some of the Tiger Brands people out of that, and I think it weighed on the share yesterday. I would think a bounce up to the just above 270 would maybe be a decent place to sell this thing, because it is starting to look like it's going to really retrace back down toward the lows. All right, the next one we'll look at here is Woolworths. And we're looking at a 2-year here, and the reason why we're going to look at that is because Woolworths failed at resistance as of yesterday. If you zoom in here a little bit, you can see very clearly how perfectly we tested that resistance level. We probably had 2, 3, 4 days where we tested it, couldn't make it. Yesterday we failed. A lot of the other retail shares obviously also failed, so it wasn't specific necessarily to Woolworths, but that's going to be a big level going forward that we're going to need to get above, for us to in order for this thing to break out. Right now it's at about 73.80. Obviously, as the days go by, that level will continue to drop as that trendline resistance comes down with it. All right, Steinhoff. Steinhoff definitely popping up above resistance here. If we look on I'll zoom in a little bit. If you look above, or look at the downward sloping descending triangle, that we definitely popped up above that yesterday. You can see that we had huge volume yesterday. I think that we did about 22 million in the auction alone. About 46 million on the day, which is incredible volume. This thing definitely looks to have a higher target. I would say we're going to pop over the 54.50 level, which were previous highs, and probably test up closer to 56 over the next few sessions. So keep your eye on those Steinhoff. Next one we're going to look at is probably the wickiest chart on the entire market, and that is Life Healthcare. Life Healthcare, I mean, this level here, just below 39, I would call it at 38, somewhere between 38.50, 38.70. Let's zoom in a little bit now that we've kind of looked at the bigger picture. We bottomed out there when we came down and tested in November and December. We sort of topped out there going back earlier in May last year, and it's really been an inflection point. We've definitely popped up over that level in Life Healthcare, and I don't see any reason why this thing can't make an attempt at new highs. I think at the very least we'll kind of bounce to the height of this channel, which is really about $3, maybe $3.50, so above 38.70. Tech on about $3.50, call it 42 to round it off. That we'll probably look at as a short-term target in Life Healthcare, and like we said, I mean, that's taking us very close to new highs. So I don't see any reason why we couldn't get there on the back of this move. And then the last one we're going to show is Mondi. Mondi trading beautifully again, breaking out yesterday above off of this little perfectly symmetrical triangle that we've just made here, and you can see there we've just popped out of the top. I mean, I suppose you could also call this some sort of a flag pattern, back down to and bounced perfectly off of support at about 180, 183.50, 184, somewhere in there. So same sort of thing with Mondi, definitely a higher target. I would say probably can make a move to over 200 Rand on this if the market supports it here. And that's it for today, guys. Thanks a lot.
Thanks, Boy John. Thanks, Joe.